Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Tuesday, August 9th. We're seeing some wild swings in U.S. stock futures this morning, but right now it looks like the market will open solidly higher. But that will do little to blunt the impact of yesterday's sell-off. The Dow Industrials tumbled 635 points, the sixth largest drop in the index's history. Since their peak on July 21st, blue chips have now fallen 15%. Meanwhile, the Nasdaq and S&P 500 both plunged more than 6.5% yesterday. Overall, it was the worst one-day decline since 2008. And it's not just the American markets. Stocks around the world have been falling since the downgrade of U.S. government debt by Standard & Poor's on Friday, and many global markets are now in official bear market territory. The major Asian markets tumbled again overnight, with Hong Kong's Hang Seng Index dropping nearly 6%. But in Europe, the markets seem to be stabilizing after some huge swings in both directions earlier in the trading session.
We're also seeing a lot of volatility in the bond markets. The traditional role of U.S. Treasuries as a safe haven investment had been sending prices up and yields down. In fact, Treasury yields fell to their lowest level since January of 2009 yesterday. But that trend seems to be reversing today. Right now, the yield on the benchmark 10-year note is moving back up to about 2.4%. Last week, Treasury yields dropped by the most in 2 years, amid worries about the weak U.S. economy and possible further contagion of the European sovereign debt crisis. Those concerns also contributed to some recent strength in the dollar, but that trend seems to be reversing as well today. The dollar is weaker against all of its major rivals, and actually falling to an all-time low against the Swiss franc.
As the dollar falls, gold continues to rise. It has been shining even more brightly lately because of its status as a safe haven investment, and its recent rally shows no signs of slowing down today. Gold crashed through $1,750 an ounce, hitting another record. The precious metal has now surged 23% this year, including a 6% gain just this week. But another commodity has been moving in the opposite direction. Crude oil is falling back toward $80 a barrel after dropping more than 10% this week. Prices had actually dipped as low as $77 a barrel earlier, as traders grow more concerned that a slowing global economy will cut into energy demand. Oil is also considered a relatively risky investment, and as we've seen, many investors are running away from risk as fast as they can right now.
With so much uncertainty in the markets, investors are now turning to Washington, where the Federal Reserve is holding a policy meeting today. As recently as a couple weeks ago, the Fed meeting was expected to be largely ignored by the markets, and it was a foregone conclusion that the central bank would leave its monetary policy unchanged. But in the wake of these massive stock losses and downbeat economic data, traders will now be scrutinizing every word of the Fed's statement for any hint of another round of quantitative easing. However, many Fed watchers say that Ben Bernanke and company don't have many options left to boost the economy. The Fed's announcement and statement are due out at 2:15 p.m. Eastern Time. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction and stock movers.